infections and the impact of the recent typhoons on the economy. The cut, the fifth reduction this year, brought the rates to new record lows. Overnight reverse repurchase at 2%, lending at 2.5%, and deposit facilities at 1.5%. Bangko Sentral Governor Ben Jokno said the Monetary Board has assessed that there remains a critical need for continuing policy support measures to boost economic activity and market confidence, citing the pandemic and the downturn caused by the recent calamities. He also said the prevailing low or benign inflation gave the Monetary Board enough space to release more liquidity to the financial system in hopes of accelerating spending. The latest easing move followed what the BSP described as prudent pause since its June meeting. The BSP has already cumulatively lowered interest rates by 200 basis points this year. Right, Dan, the index slid ahead of that decision. Were they positively surprised?
Well, we are back in business. Just take a look at my terminal here. 7,027.89 is the opening. That is a quite strong showing. That's up by 0.4%. And this, of course, after we had slid yesterday, as you mentioned, ahead of that rate cut. But that was as, of course, the majority of the economists surveyed by both Business World and Bloomberg had anticipated that the Bangko Sentral would be holding. And this was actually a pullback from what we were seeing as a rally na rin the 2 days prior. So we seem to be back at those levels. Yesterday, we were below 7,000 and now we're back above that critical ceiling, let's say. Now, the net foreign selling, however, ballooned to 1.09 billion on Thursday. Let's see how the foreigners are reacting to this rate cut. Now, another positive thing when it comes to the index is what Nomura is saying, that the index may actually rise to 7,600 in 2021. Now, what are going to be leading this? They're looking at cyclicals. I'm going to pull out the sectors for you guys here so you can see that. But they're looking at improved consumer spending, the approval of key reforms, and also this accommodative monetary policy providing some catalysts and support. Now, what they are saying is that they're looking at 18 times PE ratio for 2021. That is a growth of 52% in earnings next year from what we've seen as a contraction of what they expect to be 41% contractions in earning this year. But of course, they are saying, they're cautioning that there are valuations that are quite high right now, and that is prone rather to pull back risks in the event of negative events. Now, take a look at my terminal here. All sides of the coin seem to be rallying this morning. Financials in particular up by 1.3%. Properties, interestingly, is actually not rallying as much as the financials, and this usually is the one that is benefiting from a rate cut. And another thing on property, I'm going to pull out that index for you guys. But one thing that Nomura is saying actually on the property space is they are going to be leading the recovery when it comes to the economy. So far, if you can take a look at my screens here, they're actually now in positive territory in the 1 day. But I want to take a look at the year to date. You've actually seen them down by 16% or 15% rather. But this compares to how the benchmark has been performing, which is now becoming worse than the property gauge. So they have actually jumped 15% in the month of November. This is the biggest monthly gain in, get this, more than a decade. So that's actually 4 percentage points higher than how the index has been recovering in the month of November at least. So again, they also make up close to 80%, them together with the financials of the index. So if this property space rebounds, that may also help the index. So what would improve this? First, you've seen the unexpected jump in remittances as well, right, from the overseas workers. And you've also got the earnings recovery, like the catch up of construction of ongoing projects. The malls might be recovering from pent up demand, and later on, hotels, as of course these fears subside. But this is not without some risks. Another survey, this is actually a property survey and Q4 index report. This is by Juwai IQI. It's basically a survey of 192 real estate agents. And what they said was that rents and residential prices are expected to start recovering by next year. except in Makati City. Now, what are they
Mm.
expecting by next year? So, of course, this year has seen quite a beating for the residential prices, but next year it will grow by 2.3%, and by the third quarter of 2022, so in 2 years pa, by around 17%. However, Makati, because it was already rising nearly 132% in the past 9 years in terms of prices, will actually be seeing a decline. So the rents of Makati will be trailing the rest of the country, so to speak. Another thing to be watching out for is the foreign buying, because of the fact that COVID has cut a lot of the net foreign buying, and the property space is highly dependent on that. Very quick check as well on the financial space, and I just want to see which ones are leading the charge here in terms of the banks, of course, and who markets think will be benefiting at least from this rate cut. You can see BDO, our largest lender, surging by 2.8% together with BPI and the rest of the banks, with just a couple players sitting out this rally. Jess, now let's take a bit of a pause in the markets and zoom out a little bit and still talk about the growth prospects. Now, despite the excitement on this rate cut, that also signals, of course, that there are downside risks on the table, according to Ben Diokno. What is Moody saying about the gloomier, let's say, growth prospects?
Well, they're saying, we're going to recover. We're going to be there in 2021. The thing is, we might actually be a laggard compared to our neighbors in the Asia Pacific here. That at least is according to Moody's. They are saying that India, together with the Philippines, are going to have the deepest holes to climb out of come 2021. Specifically, you have Stephen Cochrane, the chief economist for Asia Pacific of Moody, saying that cases in the country are already down. That's a good thing. But 1,000 cases per day, that's still at an uncomfortable and stable level here. At the same time, he's saying that because of that, renewed investments will be delayed until there is further control and quarantines are eliminated, or at least if not minimized in the country. He's saying that Asia Pacific has the ability to actually contain the pandemic, but there are local clusters that actually illustrate remaining risk, particularly in the Philippines. Like what he mentioned, there are still 1,000 cases per day. He's saying, though, that emerging markets may benefit from more investments come 2021. That is, if the pandemic is better handled and emerging markets in other regions like Europe and Africa continue to struggle due to the pandemic. So question now is, what's needed in order to support growth or bolster growth come 2021? He's saying the government should actually resume its infrastructure program, and it's going to boost employment in the near term, as well as social distancing measures. It should continuously be in place. At the same time, he's saying once cases go to the double digits here, and that's going to be a bit of a stretch here, Dan, but he's saying that once cases go to the double digits, the country should quickly arrange travel lanes for business travelers and tourists from the largest markets, the likes of China, where the pandemic is already under control. Just to give you an idea, of course, you have Moody saying that they are expecting the country's GDP for full year 2020 to contract by 8.2%. They are, however, seeing growth come 2021 at 6.2%, but that has been downgraded from their previous forecast of 7.8%. So again, we're going to grow, we're going to recover come 2021, but maybe not as much as our neighbors in Asia Pacific.
And just a lot of that, of course, is hinged on the fiscal spending of the government. We had reported yesterday that the BAYANIHAN only 2/3 has been spent. Why? What is going on here?
All right, like what you mentioned, only 2/3 of the BAYANIHAN 2 has been spent rather. So that accounts for around 87.9 billion pesos out of the 140 billion fund allocated for BAYANIHAN 2. Again, that was released October 1. That expires December 19. That's meant to cover relief programs as well as 25 billion pesos worth of standby funds here. All in all, since the pandemic started, the government was able to spend 481.6 billion pesos. Question is, where's the holdup? Why has there been a delay in the release of funds for BAYANIHAN 2? Well, according to the DBM, they had to seek the president's approval first for the release of the BAYANIHAN 2 funds, and that pretty much has slowed down the process here. Now, according to Emmanuel Lopez, he is a graduate school dean of Letran. He's saying this is going to directly affect people in need of funds, but more so, it will also impact much needed injection of funds to generate employment at the same time bring back the economy into normal activity here. And there's a very interesting insight here as well from former NEDA Secretary Shalito Habito. He's saying we need to put the funds, the relief package, on the demand side, meaning those people who are in dire need of funding here. It should not be allocated for banks because it's saying that banks will just actually lend to small businesses who are not even in the mood to borrow because the customers aren't back yet due to the pandemic. He's saying that stimulus funds should instead be invested as well in effective testing, tracing, and treatment, as well as purchasing domestic goods so money can actually circulate to help boost the economy. Now, there are, of course, bills in both houses of Congress, in the upper chamber, and even in the lower house, pushing for the extension of Bayanihan 2. Again, that expires December 19. They are hoping that it would be extended up to March 2021. At the same time, you have Representative Stella Kimbo Marikina pushing for the passage of a Bayanihan 3 to actually allocate as much as 340 billion pesos to cushion the economic impact of the pandemic.
All right, just well, a lot of debates here on how exactly this money needs to be spent and what is the best course of action.
And I believe at this stage, Dan, we're going to
Okay, we're going to be talking exactly about more on this topic, especially Bayanihan 2. But first, let's take a step back and talk about that rate cut. It was a surprise, but at the same time, that possibility was always on the table. Will another liquidity release really propel an economy, whose consumers are lacking trust? We have with us on the stream Chief Economist of RCBC, Mike Ricafort. Sir, a lot had been expecting this would not happen because the previous rate cuts, according to economists, seem to not have had the desired effect. Tell us, what is additional liquidity going to do in an economy that has quite a lot of it already?
Well, Dan, good morning to you and to your viewers. Well, this surprise rate cut by the BSP is seen as a preemptive measure because well, realistically, what do we have at our disposal right now as far as the country is concerned? Given the lack of funding, limitations on the funding for stimulus measures. So definitely monetary easing measures such as the latest policy rate cut, that's already something that's readily available. And much of the heavy lifting or the onus in terms of support measures to further prop up and stimulate the economy would be well, through rate cuts as well as maybe any other monetary easing measures that may come in the coming days. But definitely, well, the cut so far has been 200 basis points since the start of the year. That's one of the most aggressive in the world. It even resulted to record gains in our bond markets. We're one of the best gainers at some point in the whole world as a result of this. Hopefully, this would bring down further borrowing costs. That's the bottom line, and that would help further alleviate the strains, especially those the most the hardest hit sectors of the economy. And hopefully, if you look at the whole picture, yes, go ahead, Danie.
Yes, sir. No, I just wanted to jump off on that point because you were mentioning that it alleviates, the borrowing rate, but at the same time, banks seem to be very risk averse, and despite the fact that they can lend more, and the fact that some are even banking on a triple R cut following this rate cut. What is going to spur the banks to start, taking those risks and to give these monies to the high risk consumers?
Actually, Dan, the incentive, well, we have seen the incentivization of lending to the MSMEs. It has already loans by about almost 100 billion pesos since April for more than 6 months. So actually, we're already seeing some results, and hopefully, this further cut in policy rates would further encourage more lending, and of course, with this in place, the incentivizing the lending to the MSMEs by allowing banks to count those loans in the computation of reserve requirements. So hopefully that would continue on, but definitely going forward, uh, what's really it would also complement any further increase in stimulus. As well, it's not just here in the Philippines, but in many other countries around the world, such as in the U.S., in the eurozone, they've been pushing for stimulus measures also to complement the easy monetary policy. Well, hopefully, we have in the lineup right now, the Create Bill, because that would cut outright the corporate income tax rate to 25% from the current 30% immediately. And there are already positive signs in terms of legislation. Well, what would complement this, like the FIS bill, it's already approved by the Senate, that would help reduce the NPLs and the foreclosed assets from the books of banks going forward. Well, then once the Senate is done in approving the national budget, hopefully the Create Bill would follow, and that is groomed to be one of the biggest, if not the biggest, stimulus measure, because on the first year that's worth 40 billion pesos, and in the next 6 years that's worth 600 billion pesos. So hopefully that would.
Sir, but what about the Bayanihan too? You've mentioned these bills, but they're still pending in Senate, sir. And the ones that are being pushed right now or have already been approved have not been spent. At least during the timeline that was given, that Bayanihan 2 is expiring on December 19. Are you satisfied with how that stimulus has now propelled the economy?
So far, Dan, well, the tangible funding would go to especially lending to the MSMEs, no? Almost one third of which, close to 50 billion, is allocated to that. At least it's moving. That's the credit guarantees that come along. That would further encourage the banks to lend to the MSMEs with credit guarantees. So it's at least it's well, considering that less than a month ago, it was well, now we've seen a dramatic utilization, 2/3 in less than a month's time. At least it looks like with less than a month to go before it lapses, it's a good sign that they'll be able to utilize the remaining 1/3, and hopefully that would add up to economic growth, especially in the fourth quarter onwards. So,
Sorry,
well, I think
sorry,
yeah.
Yes, sir. Just jumping off on that point, just our last question here on inflation. And the central bank governor has revised the inflation expectations, especially since the storm is also expected to increase the prices of food and other agricultural products. Sir, what are you hoping for, ba? Do we want to see a higher inflation this year? Does that mean that our economy is growing and consumption demand is picking up? Or are we happy to actually see a more tepid inflation, and for how long?
Well, Danie, realistically, after the storms, after Ulysses and Raleigh especially, we'll be seeing a temporary spike in inflation in November. From 2.5, say it would go up to around 2.6 to 2.7. But hopefully that's only transitory. Well, just like in any given year. But hopefully by December, well, we still see it easing, and it would remain low and benign. It would reach a little over 2%. And it could even go down to a little less than 2%, especially by January to February, due to the low base effect. And it looks like that justifies the low inflation environment, justifies the latest rate cut. It's a good. It's viewed as a good preemptive move. Unlike before, because these are extraordinary times that require extraordinary measures. That's why it's understandable that they really have. That they acted in advance. They front-loaded the monetary easing that would be beneficial to the economy if you look at it on the big picture.
Okay. Thank you, sir, so much for those insights. Of course, that was Mike Ricafort, Chief Economist of RCBC, saying that this preemptive rate cut, if this is, of course, complemented by fiscal measures to stimulate the MSMEs and the loans, would be beneficial for our economic recovery. Thank you so much for that, sir. Guys, we will have more of the news when Business World Live returns. Please stay with us.
And we're back here on Business World Live. I'm Delos Santos. Here are other headlines we're keeping our eyes on. Finance Secretary Sonny Dominguez asked the Climate Change Commission to be more aggressive in mitigating the impact of climate change. Just this quarter, 5 typhoons hit the country, setting our economy back 90 billion pesos in lost output. NEDA estimates this is equivalent of reducing GDP by 0.15 percentage points. Dominguez says these losses will continue to accumulate and dampen our economic growth if left unmitigated. He thus challenged the Climate Change Commission to advance concrete policy proposals while building public awareness and public support. Dominguez also stressed the need for better cooperation between national and local agencies to ensure more effective disaster risk reduction efforts. Now, Agriculture Secretary William Dar assures the country's rice inventory until the end of the year is sufficient even after the destructive impact of back-to-back typhoons on crops. Dar said in a TV interview that the current rice supply is still good for another 82 days, even after the end of the year. Afterwards, a new production is expected to be harvested by late March and April. Agricultural damage from typhoons Quinta, Rolly, and Ulysses have reached at least 12 billion pesos, with the most affected regions being Cagayan Valley, Calabarzon, and Bicol. Dar said rice self-sufficiency fell to 90% after the consecutive typhoons, which means 10% of rice demand would be sourced overseas next year. Dar said the DA has allocated almost 8 billion pesos worth of assistance for typhoon-affected farmers and fisher folks. Many businesses have been forced to close shop as the pandemic halted economic activity, but despite that, many still go beyond their means to help during these challenging times. To talk about that and what they have been doing, we have Philippine Business for Social Responsibility President and CEO Reynaldo Antonio Laguda. Good morning, Sir Ray. Great to have you with us on the show.
Hi, good morning, Jess. Yeah, pleasure to be here.
All right, so PBSP has been in the business of social responsibility, corporate social responsibility. Question is, what have you been doing during the since the onset of the pandemic here? Of course, this is a different situation, I gather, compared to what you have been doing the previous years. Of course, this is something unexpected. So what has PBSP been doing on that front?
Yeah, so I get everyone, I think, was really caught by surprise, right? So when we had the lockdown in March, we told ourselves together with our member companies that we needed to act, and we couldn't just sit by and watch how things were going to evolve. So we took on the challenge of really addressing who was going to be most affected by the pandemic, and also the effects of the quarantine and the distancing. So we decided to run a campaign focusing on the vulnerable sectors affected by the pandemic and the quarantine. Together with many groups as well as individuals and artists and organizations, we launched what we call the Bayanihan Musikahan campaign, which was an online campaign where artists would perform and raise funds. And working with organizations like the Samahan na Nagkakaisang Pamilya Pantawid, a community-based organization of 4-piece beneficiaries, we were really able to distribute food packs to parts of to NCR regions 4A and region 3. In fact, we were able to reach, I think, more than 120,000 families in the course of our campaign.
Mm-hmm. And what's interesting here as well, can you tell us more of the total donations that you have received? That goes by the millions. And how exactly did you allocate the proceeds here? I believe a number of those were allocated for healthcare workers as well. And at the same time, efforts to actually ramp up testing and at the same time provide hazard pay for our healthcare workers.
That's right. So we were able to raise funds from both companies and the general public, and this amounted to at least 131 million pesos. So this is really a strong show of force, and you can really see how citizen action can do a lot of things. This went to food packs, provision of PPE, and other forms of assistance, including livelihood assistance to restart some of the businesses of micro entrepreneurs. But we were also able to receive funding from our foreign partners. So we received a grant from the Global Fund to be able to purchase more PPE as well as PCR test kits, gene expert cartridges that was used now in many of the health centers until today.
Okay, and at the same time, what recently hit the country? Of course, you have a back-to-back typhoons here in the past weeks. What has PBSP been doing in that end?
So we always tell ourselves that we are used to typhoons, right? But nothing really prepares us. For some reason, we always try to restart every time there's a typhoon. So when Rolly hit Bicol, we started to mobilize, providing relief packs. But then, a week later, you get hit by another typhoon, which covers more than just Bicol, but almost the entire of Luzon. So we continue to mobilize this campaign. We know that there are many other groups and organizations that are um, raising funds and trying to do their best. And I think we try to push this collective effort of providing relief, but maybe months down the road is also to provide some form of early recovery for a lot of these affected families and communities.
Okay, Ray, you mentioned this earlier already during the start of the pandemic. One of the thrusts here is to actually support MSMEs. The DTI reporting that more than 90,000 MSMEs were actually forced to shut down. What aid should be given these small businesses, especially considering that actually also led to some level high unemployment here in the country that already totals 4.6 million Filipinos going unemployed. So what aid should be given small businesses?
Yeah, so it's a tough call, like Mike Ricafort was mentioning earlier. I think there are a lot of macro policies in play, but also looking at micro policies. It's really a set of moving parts. One is really COVID, and this set of typhoons has disrupted demand. Therefore, I think that would still be the primary play: is how can we stir demand, whether that's by increasing government spending, and how to improve cash circulation. But the other is also that the value chains for a lot of the micro and the small businesses have been disrupted. So it's important for, aside from having access to capital, is being able to uh, get the operations of these businesses to help them really adapt to this COVID environment, to this environment that's characterized by distancing. A lot of our micro businesses are not really able to adapt, and this does not allow them to recover sooner than what we would want. And then lastly, maybe I think it's good to look at when companies and even government spends for programs, is to try to see how we can make it more inclusive, so that there is a multiplier effect. So if we can source from communities, that would allow for more cash circulation and really try to spur demand in the economy.
Okay, and one other thing, I believe one of our main thrusts is education, and that has been a sticking point the past days. There have been calls for academic freeze and academic break amid the calamities, at the same time, the need for gadgets and connection here. What do you think should be done here to support the education, especially for those heavily hit by the typhoons?
Yeah, I think we should continue to support the efforts of the government, the Department of Education, in trying to reimagine what kind of new normal we will have for our education system. We continue to support the learning continuity programs, especially as when they started in October. But I think as the quarters move throughout the school year, we start to think about what would be more permanent solutions that we can get into. And really, the work of the private sector, of parents, and the rest of the community is needed for DepEd to really succeed in its efforts.
All right, thank you very much, Ray. Definitely, though it might be hard for businesses to actually be in the business of giving, you're still proving, of course, that there's still room to actually help out those in need. Again, thank you very much, Sir Reynaldo Antonio Laguda, President and CEO of the Philippine Business for Social Responsibility. Thank you, sir. And that's a first look into the business day this Friday, November 2020, and Jess de Los Santos.
Catch us again Monday morning, 9:30 a.m. I'm Danie Laurel. Have a great weekend.